Hello guys, welcome back to my channel Commerce Insight. So today we are going to study on chapter 5 Business Arithmetic of Entrepreneurship for grade 12. In the last video we have discussed about weighted contribution margin, break-even point and gross working capital. By the end of the video I have given you a question to work it by yourself. Hope you all have worked it. Now we are going to discuss the answer of that particular question. Now in this particular question you might have seen that fixed cost is not common for every product or every variant. The fixed cost is given separately. Now when the fixed cost is given separately, the break-even point for each product, you have to find break-even point for each product individually. I hope that is clear. So the formula will be changing accordingly. Now in the previous video, the first question which I discussed was this. You can see that there is common fixed cost for each variant and there is package sold and there is a sales mix percentage to be found out. Now in this question you can see that fixed cost is given separately. So since the fixed cost is given separately, you should use break-even point in single product. So the answer comes in single product. So that is why the question specifically told calculate break-even point for each product. Now moving on to the answer. First step is to find contribution. What is the formula to find contribution? Selling price minus variable cost. Once you find selling price minus variable cost for each and every variant, now you can move on to find break-even quantity. To find break-even quantity, the formula is fixed cost or fixed expenses divided by contribution. Now since fixed cost is different for each and every variant, you have to be careful on using the fixed cost of the same variant. Now you will be getting the answer. Now you are having a one another question according to the question is, how is the calculation of break-even quantity is helpful for the entrepreneur? So you have to answer by explaining the advantages of EOQ for entrepreneur. So the mark distribution, this is a 5-mark question. So the mark distribution is 1 mark for the formula. So if you're writing the formula correct, you will be awarded with 1 mark. If you're finding break-even point or break-even quantity for each and every product, you will be getting 3 marks. So 3 plus 1, that is 4 marks for the question, for the calculation, and the 1 mark for the B question, that is the advantages. I hope that is clear. If you're having any doubt, please do comment. I'll make a video on your doubts. The next important topic is economic order quantity. Now economic order quantity simply means how much to order. Means it represents the quantity of an item that to be ordered when a fresh supply is required. So that is known as economic order quantity. So in simple words, economic order quantity means how much to order. Now the formula to find economic order quantity is 2AO by C under root. So under root of 2AO by C or under root of 2DP by C. However, according to Cbse, in your textbook, the formula used is root of 2DP by C. It will be very good if you are using the second formula, and if the question is coming for the Cbse board paper, then it will be very good if you are expanding the formula and you are writing. Means EOQ is equal to root of 2 into annual demand into ordering cost divided by carrying cost. It will be better if you are expanding the formula. Now A means or D means, according to this formula, D means annual demand, P means ordering cost. Now ordering cost means the cost that refers to placing and receiving an order. So cost the cost that refers to placing an order and receiving that one order is known as ordering cost. Now carrying cost means the cost that is incurred in maintaining a particular level of inventory. Now according to your Cbse textbook, there are 4 levels of inventory level, and to maintain that particular inventory level there is a cost incurred. So that is known as carrying cost. I hope economic order quantity is clear. Again, economic order quantity in simple words means how much to order, or we can say it represents the quantity of an item to order when fresh supplies are required. Means to stock up the inventory, that is known as economic order quantity. Now there are two assumptions of EOQ, that is, the first one is the future demand is known, means the demand of the inventory is known and it is uniform throughout the period. Okay, so this is the first assumption, and the second assumption is unit price of an item does not vary, and it does not vary. It means that the price of the quantity does not vary throughout the period. That is known as assumption. These are the two assumptions which are important. So the question may ask, what is EOQ? What is the assumption of EOQ? So this is the answer that you have to present in your answer sheet. You have to explain EOQ, you have to explain the formula, then you have to explain the assumption. Now moving on to the arithmetic part of EOQ, the first question here is, a stationery shop sells 25,000 copies per year. The cost price of the copy is rupees 20 per copy and carrying cost is rupees 20% of the cost price. The cost of placing an order is rupees 20. Calculate EOQ for the copies of the stationery shop. Now according to this question, you can see that there is a 25,000 copies sold in a year. So that is your annual demand, means D. Okay, annual demand here is D. Now next one is carrying cost. How do we find carrying cost? In the question you can already see that carrying cost is 20%. Most of you make some mistake by writing 20% as it is as the carrying cost. Now when the question itself is saying that carrying cost is the 20% of cost price. Now you have to search for cost price. Now the cost price of the copy is already given as rupees 20. So you have to find the percentage. So 20 into 20%, that is rupees 4. Next one is cost of placing an order is rupees 20. So that is the ordering cost. Now the other name for carrying cost is holding cost. Okay, now the holding cost is another name for carrying cost. Now moving on to the formula. What is the formula to find EOQ? Root of 2 into D into P divided by C. What is 2? 2 is already given in the question. 2 into 25,000 annual demand. Then P or ordering cost is rupees 20 and C is rupees 4. When you do the calculation, you will be getting root of 2,50,000, and when you're taking out of the root, you will be getting 500 copies. So EOQ will be always in unit. So it will be always in units. So EOQ will be always in units. This means why? Because economic order quantity simply means how much you need to order. So that is why we are finding always in units. I hope this question is clear. So in this particular question, you were asked to find the carrying cost separately. In some other question, everything will be given to you directly. All you have to list it down, write on the formula and do it. Now again I am repeating, here in this question carrying cost was 20% of cost price. So you have to find what? You have to find the 20% of cost price in order to reach to carrying cost. Rest is given in the question itself. All you have to substitute into the formula and find it. I hope this question is clear. Moving on to the next question. Next question is, Pankaj, an entrepreneur, started a new business website or new website, Save Electricity, to sell LED bulbs. In the first year, he sold 2,400 bulbs at the rate of 100 rupees each. The cost of placing an order and receiving the bulb is rupees 500. So, what is that? That is ordering cost. If the economic order quantity is 200 bulbs, find out inventory holding cost. So what is inventory holding cost means? You are asked to find what? You are asked to find carrying cost. You are asked to find carrying cost. So holding cost means carrying cost. I hope that is also clear. So now first you have to list out what are the items given here. Now first thing you have to list is EOQ. Now EOQ is already given in the question, so that is 200. Annual demand is also given. He sold how much? 2,400 in the first year, so that is your annual demand. Now ordering cost is also given. The cost of placing an order is rupees 500, so that is given. Now all you have to find is carrying cost. List now, right? What is the formula? EOQ is equal to 2 dp by c. Now substitute all the values. Now c here. Now under root of 2,400 into 500 divided by c. Now you this is 200. Okay, so 200 is equal to EOQ is equal to root of 2,400 into 500 by c. Now when c is taken to the other side of equals, what you can do is to remove the root, you can square the EOQ. So since c is taken to the other side of equal, the root will be removed and EOQ will be squared. So this is how we are going to calculate. So multiplying 2 into 2,400 into 500 divided by square of 200, that is 40,000. So when you are dividing 24 lakh divided by 40,000, you will be getting 60 per unit. Okay, now to find holding cost, he sold 2,400 bulbs of rupees 100 each. To find holding cost, all you have to multiply 60 into rupees 100 to get the carrying cost or holding cost. I am explaining once again. To find carrying cost, all you have to do is you have to take the carrying cost to the other side of equals, and you have to bring EOQ to the other side of equals. Means EOQ will be coming as denominator of this particular formula, and C will be going to the other side of the equals. When EOQ is coming to the denominator of the formula, EOQ will be squared because there is a root of square root. So that is why EOQ is being squared. So when you are squaring the EOQ, already the root will be removed. So 24 lakh means 2 into 2,400 into 500 is 24 lakh divided by the square of 200, that is 40,000. So 60 per unit. Now to find holding cost, in the question it is already told he sold 2,400 at a rate of 100 rupees each. So that 100 rupees into 60 unit is known as 6,000 rupees, that is holding cost. I hope this question is clear. Please write down this question, do it by yourself. Take a pause and then do it. If you are having any doubt, do comment down. Now one question as homework or to do it by yourself is, this is the question. P runs an online business. The annual demand of the business is 16,000 units. The annual holding cost is rupees 48. The cost of placing an order is rupees 1,500. You are asked to find the EOQ. Now I'll explain the question. Now annual demand A is already given. Then holding cost means carrying cost is already given. Ordering cost is already given. All you have to do what? All you have to put it into the formula and find it. So I hope this particular question, this particular topic is clear to you. If you're having any doubt, please do comment on my channel, and if you're having any doubt on the previous topic also, please do comment on my channel. So have a nice day. Thank you.